Hey, good afternoon. Welcome back. Today is Thursday, 6th day of May, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. We also stream live during this broadcast on our YouTube channel, which is youtube.com/CFRN. Very easy to remember, youtube.com/CFRN. Not only do we stream live, we archive each and every daily show on our YouTube channel. Currently, we have over 1,700 daily broadcasts archived for your viewing and educational pleasure. For that, let's open with a word of prayer. Heavenly Father, we thank you today for your blessings, for your mercy, for your grace. Thank you for allowing us to gather for this broadcast. May we have meaningful discussions that will help us to build each other up and glorify your name. Help us to share things that will benefit all of us and draw people to the kingdom. Help us to deal with different challenges that we face as a team, as a community. May we approach each other with respect and kindness. And we pray, God, that you would create an environment of cooperation in this place. Help us to all be of one mind and one accord and in one spirit. In Jesus' name we pray. Amen. Okay, happy Thursday, everybody. Hope it's a happy Thursday where you are. Special prayer for my brother-in-law Eddie, who got some not so good news today. Lord, we know that you're the ones who created us. You're the one who put life in our bodies. And they say it's not over until that one lady sings, but we actually know that it's not over till you say it's over. And that's what we believe. I just pray that your peace would be with my brother Eddie. Surround him with your love. And all the doctors and nurses, let them be at their very best, to do their very best. Okay, all right, numbers around the world. Here we go. Let's do it. The Dow currently up 166 points. NASDAQ down 10. S&P 500 up 12. The Russell 2000, our man in the street, down 16. So here we are with a divided camp again. We've got the Dow and the S&P both in the green. NASDAQ and the Russell both in the red. But no movers or shakers amongst any of them. So relatively quiet. In the commodity basket, crude oil down 41 cents, trading 65.22 last. Gold, now there's a mover and a shaker, up $29.70, trading 18.14 last. Silver, there we go, up 96 cents on the session, trading 27.49 last. That's a gain of over 3.5%. A reminder that when the price of silver moves $1, if you're trading futures, a large futures contract, a $1 move is worth $5,000. Silver is up 97 cents on the session. It's 3 pennies shy of a $5,000 per contract move. In the Asian markets at the close, Nikkei posted a gain of 518 points, almost 2%. Shanghai fell 5. The Hang Seng rallied 219. And in the European markets at the close, FTSE up 36, the DAX up 25, and the CAC up 17. That gives us a mixed day in Asia, a green day in the UK, and it's a mixed radio Thursday here in the US of A. Speaking of Thursday, two things. Number one, Thursday is Dr. Tom Day, so he should be joining us at the top of the hour, 1 p.m. Eastern. And tonight, our members only workshop every Thursday night, 9 p.m. Eastern. Now, if you've been on the trial with us this week, we have treated you just like a partner the entire week. You've had access to everything we do, from the live room to all of the alerts, to the indicators, to the platform, you name it. You've had 100% access to it. However, Thursday nights are reserved for members only. So as you can see up on the screen, if you're ready to grab your lifetime passport, just go to Emini futurestrading.com, and with one click, you'll become a CFRN passport holder. Valerie will spring into action. She'll make sure you have everything you need, all the links, all the invitations to the different Telegram channels, the demo platform, indicators, everything. And you'll be able to come to the workshop tonight, which starts at 9 p.m. Eastern. So with that, we'll go to Michael, get a recap of what happened this morning in the live training room. After that, I'll come back. We'll go over the logic alerts, the concierge trade alerts, and then at the top of the hour, we'll talk to Dr. Tom. Michael, take it away. I can see your screen. I can see your charts. All right, it's all yours. I am ready, and I see this message in the chat box. Let me see if I can figure out what that problem is. Hang on. Let me open up YouTube. Dr. Tom's coming on. I wanted people to be able to hear you as well. Valerie runs a backup recording, so we can always use the backup recording that has your voice, but just okay, you say something. Okay, you say something. Okay, you say something. Okay, okay, you say something. That I don't know what that noise is. Okay, you say something. Hang on. Let me just try to figure out real quick what the problem is. Let's go here. Let's go here. I'm going to turn this off, this off, and this off. This off for right now. Let's turn all of those things off. And then go to settings, where everything is enabled exactly as it should be. So try. Hang on. So try talking again. So try talking again. So try talking again. That's bad. That's really bad. But I couldn't hear your voice at all, and it's usually my voice that gets dropped down. Got the noise suppression on. Got it on that. Boy, for the life of me, I can't imagine. Okay, I've got noise suppression on. Kill out the background noise, but that's not you. Broadcasting. Wow, this is odd. I want to say it could be something on your end, but that doesn't make sense because we can hear you perfectly through the GoToWebinar interface. All right. Well, folks, if you're listening or trying to listen via youtube.com/CFRN, may I suggest you go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and you'll be able to hear everything I say, everything Dr. Tom says, and we'll ask Valerie when the broadcast is over to upload her copy to YouTube and delete this faulty copy, and then hopefully somehow between now and then I'll figure out what the problem is. Okay, recap of the recap. Good job. And also, Dwayne, and thank you very much for alerting us to the problem. Just mystified. I want to just dive in and figure out the problem, but I can't right now because the show must go on. So, oh boy. Oh boy. Okay. All right, guys, let's do this. Let's dive right in. This week, Logic 247. That's our around-the-clock alert service. Starts Sunday night at 6 p.m. Eastern when the global futures markets open. And alerts come out around the clock as opportunity presents based on current price action. Around the clock, could be 2 a.m., 2 p.m., right up until Friday afternoon at 5 p.m. Eastern. Now, so far this week, we've issued a total of 54 alerts. 7 ever triggered. Still waiting on the outcome of 6. We've had 41 actionable alerts, of which 10% have been stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and a simple 3-step methodology that we teach all of our traders. In the live trading room, we use an 8-tick hard stop on every market, on every trade. S&P, Russell, NQ, crude, gold, whatever Michael's trading. 8-tick hard stop. What he's teaching you is he's teaching you the strategy, he's teaching you the trade setup, and he's teaching you the importance of always having a physical hard stop in place. But to keep things simple as you're learning the strategy, we just use an 8-tick hard stop. If you choose to move into the larger time frames, and as you trade the alerts, as you're practicing everything Michael has taught you, we use market structure to set the stop loss. And if you book a one-on-one mentoring session with me or come to the workshop tonight, we will go over in detail that 3-step process so that you'll always know where to put your stop based on the structure of the market. Now, along with the Logic 247 alerts, which are based on current price action, we have the concierge trade alerts, which are based on historic price action. If you want to grab a screenshot of those, you can. Here they are. They come out, again, once per session, not around the clock. This is forward guidance for the entire session. When this report is published, go to your chart, put a line in the sand, in this case at 41.86, put a line in the sand at 41.51. If price starts trending up towards 41.86, that's bullish, of course. And so logic will start looking for opportunities to buy the dips, buy the pullbacks. If price starts trending down to 41.51, that's bearish, and logic will start looking for opportunities to short the market or sell the rallies. We're either going to buy dips or sell rallies. That's the strategy in a nutshell. So with that, we'll go to the daily chart of the S&P. It's where we like to start every day. It's where I recommend you start your session, whether you trade in the morning, afternoon, middle of the night. If you leave your charts running around the clock, you need to do this on the daily chart. If you're using DT Pro, I don't know about other platforms, just put it on any other time frame. Go back to daily. And that straightens out any kinks that there might be in the indicators. So back on the 29th of April, we put in a new all-time historic intraday and closing high. And that high has held so far. We were long overdue for a pullback to the BBC because price always reverts to the mean on every market, on every time frame. Now, there's very few absolutes in the world of trading, but this is an absolute. Price always reverts to the mean. In our case, the mean's green. We call it BBC, which stands for bull, bear, cross. Cross above it, we're bullish. Cross below it, we're bearish. Above it, bullish. Below it, bearish. Very simple. The other indicator, the red and blue one, that's called the CFMA1, which I refer to as red and falling, bearish, blue and climbing, bullish. So obviously, when you've got these two working together hand in hand, and this step line on the left side of blue and climbing, no matter what market, no matter what time frame, that's the best conditions you can hope for. And when you have this dynamic in place, it doesn't matter what the MACD says, it doesn't matter what the stochastics say, it doesn't matter what the RSI or the trend or the tricks or the advanced decline line says if the indicators are stacked, BBC, blue and climbing, step line, price is green, please don't be short. Okay? All markets, all time frames. Now, once we put in the all-time historic high and price could go no higher, price did what we would expect. We had drawn a couple windows here over the weekend, and we said there was a window of opportunity here from 77 to 70, which would take us down to this support level on the daily. We traded through the support level, which took us to our next window of opportunity, 41.58 down to 41.30. That's a 28-point move at $5 a point. Now we overshot 41.30. We traded as low as 41.20. So there's another 10 points on that. Now, we expected this area to be good support for a number of reasons. It's the 24% fib retracement of the last leg up on the daily chart. It's also the 38% Fibonacci price extension of the entire move up. And we had a low of the day here and here and here. And price touched the 24% fib. Now, the daily BBC, when price reverts to the mean, the pullback holds more often than it doesn't. Just like back here. When this was the new all-time historic high and price pulled back to the BBC, it held. And we caught a beautiful bounce up to the step line. When we approached the step line from below, we expected to be good resistance, and it was. It sent us back to the BBC, which we expect to be good support, and it was. And that took us on this historic rally that we've been on for some time. Is it possible this could be a head? This could be a shoulder, and we could be developing a right shoulder here, which would put a neckline, right about here. Yeah, we're not pattern recognition people by trade, but sometimes you can't ignore. Now, nothing wrong with pattern recognition. It's one of the oldest ways of trading, and some people, that's the only way they trade. But that means you've got to wait for one of those well-recognized patterns to appear, which means you might spend a lot of days without any trades. So whatever works for you. Now, price is approaching the high of yesterday. Let's see, yesterday's high was 41.80. Today's high is 79.5. Okay, so we're 2 ticks below yesterday's high. We've already taken out yesterday's low. We came down, and now we've bounced off the BBC for the second time. Remember, the pullback holds more often than it doesn't. So the pullback to the BBC, we've now bounced twice. However, we've got red and falling overhead, which we expect to be good resistance until proven otherwise. And right now, red and falling is positioned at about 41.85. Okay. So if we rally up another roughly 10 points, that resistance comes into play. And if we roll over, that would be somebody's definition of a head and shoulders pattern. Okay. Now, the way a head and shoulders works is from the top of the head here. I'll just use the other. I'll do it the other way. I'll use this. From the top of the head. Now, we don't have this pattern yet. I'm just saying if it develops. And if we put our neckline right there, then the way this is supposed to work is you get what they call a measured move from the top of head to the neckline. then once the neckline is broken over here, and that would take us basically to the 50% fib retracement on the daily chart. A little past the 50, here's the 62%. And I've said for a long time, I think price will eventually come back into this area here because it took us so many attempts. 1, 2, 3, 4, 5, 6, 7. It took us 8 daily attempts to get through that area. Good resistance often becomes good support. So head and shoulders not fully developed. All it would take, though, for it to develop would be for us to find resistance either here at the step line, or we could even go a little higher, find resistance at red and falling, and then roll over. And I'm going to call the neckline 4111. So if price trades below 4111, first window of opportunity would be right here, down to the 38% fib retracement of the last leg up, and then a continuation. If we break the 38 down to the 50, and here's the 62, just above that important area I was talking about. But even perhaps more important, this entire bullish move, which began on November 2nd, from the November 2nd low to the April 29th high, this is the 24% fib retracement of the entire move. That would put the S&P 500 E-mini futures down around 39.75. Yes, that would freak a lot of folks out. However, we know that's how markets work. The deeper this retracement, the healthier the bull remains, and the greater the ability for it to have enough energy to take us back up to the all-time historic high. Now, what if this gives way? Well, and it gets really quite ugly because this is the 38% of the entire move up. And this 50% Fibonacci retracement of the entire move up. Now, this was not the 50% fib of the entire move until we put in that recent new all-time historic high. But look how it lines up right there. Now, that's not a forecast. It's an observation. The real purpose of just going to the daily chart before you start trading is to identify where major resistance and support is, because you can't always see it on the smaller time frame. We know the high of the day, of course, is important. Yesterday's high is 2 ticks higher than today's high. And we've got red and falling. So any one of those areas could become good resistance. And then support would be at today's low, the daily BBC. We'll see how the session turns out. And we'll talk more about this potential head and shoulders. Again, head, shoulder, shoulder. And then the neckline, 4111. That's broken, and it's a very high probability that we will see this 50% fib retracement of the last leg up. Now, 20% of the time, the market does not do the next high probability thing. Order flow shifts. You get into a long trade because there's more buying pressure than selling pressure. You get into a short trade because there's more selling pressure than buying pressure. However, that can change while you're in the trade, and there's absolutely nothing you can do about it. There's no indicator or oscillator that can predict it. So don't waste all your time and energy looking for ways not to get stopped out. Spend your time and energy learning how to find windows of opportunity, and then develop the confidence to take advantage of those windows of opportunity, knowing full well 20% of the time the market's going to do something other than the next high probability thing. So with that, we go to the 30-minute chart of the S&P. Now, the CTAs here, remember we draw a line at 41.86 and a line at 41.51. The lines are already drawn in because of the way I'm handling this. Now, this is where the session started. So this green line over here, that was not the CTA yesterday. It's just for today's session. 41.86 above, which we haven't reached yet. 41.51, which we did reach. The trade to target was 41.46/47, the weekly zone. So from 51 to 47, that's 4 points at $50 a point. It's $200 per contract traded. Now, that's just the concierge. Okay, we also had logic alerts, and we'll scroll through all of those at some point in the show here. Now, let's get rid of this old weekly zone. Anytime you see a yellow line, that's a previous weekly zone, and it has served us well. But I think now that we've traded below it and traded well above it, I think it's served its purpose, and I want to keep my charts as clean as I possibly can. So now we're just looking at this week's weekly zones: 83.84, 96.97, 42.15/16. The highest weekly zone is up at 42.60. The lowest weekly zone for this week is down at 41.06/07. So last night's CTA triggered, hit the target. Important prices, important areas are almost always tested. So price not only ran to the target at 46.47, continued down to put in a low at 41.41. So from 51 to 41, that's a 10-point move in total. And then price got back above the trigger. Now when this candle with this wick, this big green candle with this wick below, you have to understand that when this candle opened right here, it was a red candle all the way down to the weekly trading zone, at which point buyers stepped in and drove us up to where we are now. The weekly trading zones are given to our members every Monday morning at 6:15 a.m. Eastern. We've published the zones every Monday for our members since December 14th of 2009. And this is exactly how the zones have behaved since the inception. When price rises to a zone, we expect it to be good resistance until proven otherwise. When price drops to a zone, we expect it to be good support until proven otherwise. Only three things happen at a weekly trading zone. Consolidation is the most likely. Rejection, second most likely. Third and least likely, but it happens maybe 5% of the time, maybe 10. Consolidation, you're going to see that 75% of the time. Rejection about 20%. And about 5%, you'll get a slice. This is where price slices through a zone like it's not even there. Now, since we consolidated so much here and here, this isn't necessarily the best example of a slice, but I can show you how a slice works. Over here, we sliced down through the zone like it wasn't even there, and then price retraced back to the zone it sliced through, and then it continued in the direction of the slice. Okay, so on this one, we would expect price to now retrace back to the zone and then continue in the direction of the slice. However, as we pull back, there are obstacles along the way. The step line, that can be good support. It's right at the low of the previous candle. Then below that, we've got, of course, the zone 66/67. So we've not triggered the CTA on the long side. We did trigger on the short side twice. Once an alert triggers, There's a greater probability of it triggering multiple times than not triggering multiple times. Okay. So this high at 41.80, this high 79.50. Remember we said yesterday's high, we were 2 ticks shy of yesterday's high. And you can actually even see that on a 30-minute chart. What you can't see is what happened on the previous day or the previous day. You can't see the all-time historic high. So again, good idea. Spend a few minutes with the daily chart of the market that you're going to trade before you drill down to your smaller time frames and start trading it. If price does retrace back to this zone, then it will give us an opportunity, if the pullback holds, it holds more often than it doesn't, to go long. If the pullback fails to hold, then we will have an opportunity to go short. What do we have right here, right now? Well, if we take out yesterday's high at 41.80, we got a zone at 83.84. So from 41.81 to 41.83, that's a 2-point window of opportunity. I'm not going to put it out as an alert, but if you should choose to trade that, then feel free. Again, 41.81 up to the zone at 41.83. It's just a 2-point trade. But we can't even think about that because right now the 30-minute candle's red. Okay, so price is dropping. Price is looking for support. Price found resistance 2 ticks lower than yesterday's high. So that in and of itself is a little bearish. Okay. And so now price is trying to find support. It could come here at the step line, most likely at the zone. Am I saying buyers couldn't just step in right here, right now, and drive it back up? Absolutely, they could, and they might. 20% of the time, the unexpected will happen. Now, if you don't have a definable edge, if you don't have a methodology, if you don't have a strategy, then everything that happens is an unexpected event. Okay? But once you understand how price flows, the same on a monthly as a 1 minute and everything in between, once you understand fixed support and resistance and the dynamic support and resistance that the indicators provide, then you always know what the next high probability move is. If price were to reverse here and take out yesterday's high, we know with certainty the high probability move would then be to go from 41.81 to 41.83. Okay, so let's move on to the Dow. Dow put in a new all-time historic high yesterday. Check this out. We've got a chart. New all-time historic high on the Dow yesterday, both intraday and closing. And now today an even higher high. But the S&P well off its all-time historic high. Now the S&P and the Dow, they have a 10-to-1 relationship. On any given day, if the Dow's up 100 points on the session, the S&P will be up roughly 10. It's always that 10-to-1 ratio. To see this divergence between how the S&P is behaving and how the Dow is behaving, part of it has to do with the fact that we're in earnings season, but I'm just pointing out that it's unusual. Okay, so the CTAs can act as an iron curtain like this. Now, over here, this was yesterday's session. So this CTA line starts once the alerts came out last night. Last night they came out at 6:25 p.m. Eastern. So it was during this first 30-minute candle. So here's price trending up. Here's price trying to make a move to the downside after a bullish cross. So this doesn't have a lot of importance. So just like with weekly zones, you'll see price walk right up to a CTA. It's an important price, important area. Market has to make a decision. This is what we covered last Thursday night in the workshop. First time up, it was the iron curtain, turned price, sent it in the opposite direction. On this approach, we actually got through, and we traded from 34,180 up to 34,218. That's almost 40 points at $5 a point, $200 per contract traded. Over here, this is a little different story. Okay, here you have the support of blue and climbing, okay, which is what you want for a long trade. Here, you've gotten above red and falling, but as you trigger and see, we get a flash of blue. Actually, it does turn blue there. But this is one you'd want to exercise caution on. The swing high here was 238. So from 180 to 238, 50 points, $5 a point, $250 per contract traded. On this move, you had the support of blue and climbing. The indicators are stacked. You've got the BBC, blue and climbing, and the step line. Everything's perfectly aligned. And so we get an initial trigger here that takes us up to 34,201. 20 points, $5 a point, $100 per contract traded. And then we get back below the trigger. And this time we trigger, and this time the market seems to mean business because we've traded all the way up to 347. Alexa, 347 minus 180.
347 minus 180 is 167.
Alexa, 167 times 5.
167 times 5 is 835.
Okay, so that's an $835 per contract move if you got out at the exact swing high, which is very difficult to do because you don't know it's the swing high or swing low until after the fact. Price has started to walk sideways. So if you have that much profit under your belt, I mean, you can wait for the indicators to catch up with price. You can wait for an exit signal, or you can just take your profit. Don't let the fact that you missed getting out at the exact high. From here, price could retrace right back to the trigger. Remember, important prices, important areas are almost always tested. So it would not be unthinkable for price to come back to the BBC, spike below the trigger, make another run. I don't know which path it's going to take because we don't know what's going to happen next. We don't try to fool you into thinking we know what's going to happen next. Nobody does. I don't care how sexy their website, how clever their ad copy. They do not know. Let that sink in. Because there's probably, somebody out there you get emails from periodically. They show you a chart of what a killer day they had. You should hit reply and say, well, okay, that's awesome. What happened yesterday? What happened the day before? What happened last week? You see, what we do is a little different in that we come on this show every afternoon, and Michael meticulously goes through every single move he made during the morning session. He's putting on, taking off trades in front of a live audience. Then he comes back and meticulously explains every trade, every move. Then I go to the alerts, which is what we're doing now, and we meticulously go through every move the market made. We look at the logic alerts, we look at the concierge alerts. We're very transparent. So if you ever wonder, if you see us have a huge day, whatever your definition of a huge day is, if you're wondering, yeah, well, what happened yesterday? Well, just go to youtube.com/CFRN and scroll back to yesterday's show. Yeah, well, what about last week? Scroll back to last week, last month, last year, 2 years ago. We do everything to be as transparent as we can possibly be, because there's all that other stuff out there. Michael and I used to have to deal with all that stuff. And we said early on, if we ever figure this thing out, we're going to create a place where people can come and be treated with dignity and respect and actually learn how to trade. By the grace of God, not because we're so terribly clever, but by the grace of God, we were actually able to create such a place, and you're here right now. So let's go to the Russell. Next on my list. CTA last night for the Russell on the long side was never triggered. Here's the beginning of the session. We did trigger on the short side right here at 22.25, and the initial drop took us down to 22.02. So it's 23 points at $50 a point. That's over $1,000 per contract traded. What's price trying to do now? Looks like it was trying to get back above the trigger. The swing high was 24.7. So it didn't quite get back above the trigger. It would have been nice to see it get above the trigger, find resistance here, and then give us another nice leg to the downside. And that may still happen, okay? Because price has now found support at the step line. Yes, we've got a red candle, but we're off the low of the candle, and this isn't support. Because red and falling is directly below price, that can be good support. If both of those fail to hold as good support, then we'll have a nice window of opportunity to trade right here. We just got a new candle. This could potentially be the candle that takes us back above the trigger to touch the BBC, to then give us a leg to the downside. Or if buyers feel they're up against insurmountable odds, they will simply, instead of stepping up, they'll step back, let price drop, and they'll buy at a better price. Who wants to buy at 22.20 when you think there's an opportunity to buy at 22.02? Well, if you watch the candles, it tells you the story. The narrative develops right in front of you. Okay. Next on the list is the NQ. Dr. Tom should be here momentarily. CTA last night on the NQ was to be long, 13,677. This was the beginning of the session. On the short side, the CTA was 13,456. We triggered, ran right to the zone, caught a bounce, and then this wick was a red candle. We triggered again. So from the trigger at 456 to the zone at 91, about 60 points at $20 a point. That's $1,200 per contract traded. Then over here, this was another 900,000 bucks. Okay. Remember, this candle, once we got back above the trigger, when this candle opened, it was red all the way down to the bottom of the wick, and buyers came in and drove it back up. This was a red candle. This was the second trigger. Okay, next on the list is crude oil. Okay, CTA last night, long 65.95, Iron Curtain. Price marches right up to it, says no thank you, heads in the other direction. Price comes down to the short CTA, and from 64.90, we've got a weekly zone at 70/75, so that's a $150 per contract move. Price then gets back above the trigger, does it again for another $150 per contract. And then there's gold. Whether it's in them there heels or in your pocket, that's entirely up to you. Okay. This was the open last night. The long CTA on gold was 17.91. So we trigger it. We go to the zone overhead at 94. That's $300 per contract traded. And then we get back below the trigger. Important prices, important areas. Almost always tested. This one you have to be more careful because you've got red and falling overhead, and that's bearish. Can you trade it up to, did it touch the zone? It did. So it's a $300 move. And then what turned out to be a $500 move. And then we got, do we get back below the trigger? 1790.8. Yes, by 2 ticks, we got back below the trigger, but this time we've got blue and climbing. And so we've pulled back below the trigger to the BVC. The pullback holds more often than it doesn't. So from 1791, we trade all the way up to 18. So that's $2,700 per contract traded if you got out at the swing high, which is very difficult. But now you see prices walking sideways. Now on this bullish move, look at the step line. It's on the left side of blue and climbing. It steps up and over, up and over, up and over. But what did it do here? It stepped over, stepped over. What we're watching for now, because the step line has gone from the left side to the right side, blue and climbing, the first red candle that closes below the step line, closing price of that candle becomes the official exit signal. Now, do you have to wait for the exit signal? No, it's your trading business. You could take profit here, or here, or here, anywhere along the way. This was the 9:30 a.m. Eastern opening candle today on Wall Street. The high of the session, 1818. Now the short CTA, which of course was never triggered, is down at 1777. And there he is, right on cue. Dr. Tom. Oh, well. Here, I'll just give them this real quick, and then we'll be done with all of them. The trigger last night, guys, on silver was 26.72. And so we triggered it once, twice, 3 times. A $1 move in the price of silver. That's $5 grand if you're trading futures. And so from 26.75 to 27.75, if we make it up there, that would be a $5,000 per contract move. We're not there yet. And just like gold, we may get an exit signal here. If we do, take your profit. However, it looks like instead of an exit signal, we may just get off the shallow pullback another little leg to the upside. So silver is volatile. Margins are high. Be very, very careful. With that, Dr. Tom, welcome to the show. Will you be using the screens today, mate? All right. I'll make that magic happen. Got a what? Oh, we do. Well, that's always nice. Jailbreak. Now, that's something you do to an iPhone when you want to run software that you're not supposed to run on the iPhone. And people used to love to, but this is different. Okay, if this is going where I think it's going, this is very important, guys. But I don't want to steal anybody's thunder, so we'll let Dr. Tom just take it and run with it. But I think I know where we're headed. I'll let you know at the end. It's cut off. I can only see jail B, and then the right side of the screen gets a little cut off. It's kind of like if you can drag it to the left, maybe, or okay. And now I can see the whole thing. What program is that you're running? Is that Acrobat? Oh, it is PowerPoint. Okay, I don't have PowerPoint, although I have the Adobe suite of tools. Now I can see it all. I can see the whole thing now. I can see the whole framework and the slides on the left. But when you blew it up to full screen, I was only able to see the word jail, and then it cut off at the B. Perfect. That's a good bingo. No. Okay. They tell you it's your own money. A new option is coming. Hundreds of banks are in the process of making cryptocurrencies available to their clients. So this isn't a pitch to move money into cryptos. Just as you say, you can take your money out of stocks, and I know that uh, you're most likely going to point us in the direction of gold, and I'm very bullish on gold and silver, both. But I just want to throw in, because the news article just came out yesterday. It's a company out of New York that's putting this whole thing together. It's going to make it now. U.S. Bank and another, uh, several other major banks in the U.S. have already done this, but over the next couple of weeks, we're going to see about 200 different banks come online offering crypto to their clients. So I just throw that in for free. Please continue. Mm-hmm. Mm-hmm. Yes, I do. Mm-hmm. I would for an investment, but not for a trade. Mm-hmm. Right. Yeah. And so many people with retirement plans and things, if you asked them, "Are you invested in Wall Street?" I think a large percentage of them would go, "No, no, I just got my 401k at work," not even realizing that that 401k doesn't just make money on its own. Somebody somewhere, some broker, is buying and selling stocks, and putting them into that portfolio. Hmm. No, no. Hmm. Yeah. Yeah. Hmm. These are what they call those whole life policies. Oh, that's it. That was on the tip of my tongue there. Universal life. Now, I'll be honest with you. When you started talking about get your money out of jail, I thought you were talking about the bank itself or banks, because anyone who has any money in a bank, if you've ever tried to get any, if you've ever tried to take more out of the bank than you can put in your pocket, in fact, you can't even get that much. It's a big deal to try to take any sizable amount of cash out of a bank. I mean, uh, they get they get real uptight real quick. Now you and I, we've discussed this before on the show, but uh, that was the jail that I initially was thinking of. You're talking about things that maybe happen inside of a bank or just inside of a person's portfolio, but I think of the bank itself as a jail. Once your money's in there, good luck getting it out. I mean, yeah, you can always get a cashier's check, but if you have cash in hand and you deposit it, you run the risk of having a very difficult time getting that cash back in your hand again. So, anyway, go ahead. They don't have enough money to make everybody whole. They just don't. And didn't they change the amount that they insured at some point? Okay. So what you have to do is you have to break that up into separate accounts so that each individual account is protected. So if they're guaranteeing 250,000 and you get $1 million, then you need to open account A, account B, account. You could open one in your wife's name, one in your son's name, one in your daughter's, however you choose to do it. This way, you do have the FDIC protection for all of your accounts. But in a worst case scenario, it won't matter because there's not enough money to go around anyway. It has to be in a different name, or it could be in an LLC, I suppose. But now you're creating more expenses and record keeping. But anyway, mm, okay, so that's three. Yeah. Ah. Mm-hmm. Right. Right. I keep some of your money in my left pocket and I keep some of your money in my right pocket. You're well diversified. Uh-huh. Crickets. Mm-hmm. Mm-hmm. And had it not been for the bailout, I think the world would have probably spun off its axis. Mm-hmm. Now, folks, this isn't in some dystopian novel. That what he just showed you and read to you, that really happened. I know it's a little off topic here, but you just said bonds, and I just wanted to throw this in before I forget. The state of Virginia, if I understand correctly, in order to get people to take the vaccine, they're actually giving away government bonds. Had you heard that? Okay, all right. I'll check into it some more, but please go on. Mm-hmm. 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 Which has so far, if I'm not mistaken, 5,000 people have died after taking the vaccine. Doesn't I can't say that the vaccine caused their death, but it was on Tucker Carlson last night. He had some statistics that I haven't fact checked myself, but did you happen to see the episode last night? Okay, yeah, it was. Mm, hmm. Yes, and they're owned by the same uh, intellectual cartel, right? Hmm. Duck, duck, go. Okay, yeah, good, good. Hmm. Hmm. That the out in the beginning, one of the hallmarks of Google, it really looked like a white knight. Their slogan was "Do no evil," and everything was it really appeared to be unbiased in either direction. It was just it is what it is. But that algorithm has been tweaked over the years, and we've seen it happen with our own eyes. It is slanted so far to the left. It's what good's the Constitution anymore? I mean, we're being force fed what they, whoever they are, deep state, whatever term you want to use, we're being force fed what they want us to believe. And in doing so, it becomes historical in context. History is being rewritten. And so the younger folks who are growing up with this today as their only window into the world of truth, uh, I, I don't need to go on, I don't think. Yeah. I better stop now while they still let us get on YouTube. So, yeah. But they're a public company. I know what you mean. I know. What? Tell me again what it is you're. Okay. Yeah, I heard there was one coming. It's okay. speaking of the S&P, they just rolled out a couple of new index funds. We're all familiar with the S&P 500, and they just rolled out a Bitcoin and an Ethereum cryptocurrency index, which is, yeah, just, again and again, day after day, more and more acceptance. Banks, we're seeing the mainstream adoption that's been talked about for a number of years. It's finally coming to pass. And again, I want to apologize to all of our YouTube listeners. We've had some audio issues today with the YouTube stream. However, once the show ends today, we're going to remove today's show from the YouTube platform. We're going to replace it with our backup copy of today's show. We always have a recorder, Valerie does, running in the background just for days like this, because everyone who is logged into the platform can hear your voice, Dr. Tom. But those listening via YouTube cannot, but that will be fixed when we upload the recording later today. So please continue. Excellent. Oh, yes, his platform. It is called, hang on, Donald Trump's social media platform has launched, and it's just a blog. Okay. Now, this is written with a liberal slant. After months of promising his own social media network, sure, we can do that. Yeah. Okay. Well, the article that I was reading from, it's by The Verge, which is liberal media. After months of promising his own social media network for banned posters, former President Donald Trump on yesterday, launched a new section of his website, essentially a blog. The platform is styled like Twitter, but hosted as a running blog of Twitter-length commentary from President Trump. People can sign up for post alerts on the platform through their email and phone numbers and are allegedly able to like them, although that function doesn't appear to work as of publication. Users are also allowed to share Trump's posts on Facebook and Twitter. The Twitter sharing option doesn't currently work, but Facebook's does allow people to share Trump's posts. And so let's just hit back on this. Here's from Politico, why Trump's new blog could lead to more social media takedowns. Now, again, this is we're using Google, so let's try this. Now we see what we got there. Let's go to DuckDuckGo. So, okay, on DuckDuckGo, we get two posts, or two videos at the top. Trump criticizes Facebook ruling, and then Marjorie Taylor Greene predicts social media platform. Now, using the same search, Trump's social media platform, if we go back to Google, this one appears to be neutral, but this is anti-Trump. This is anti-Trump. So that's a good example, folks, of what Dr. Tom was talking about at the top of the show. Using the same search terms, you get some very different results. I heard her last night. Carlson, Tucker Carlson. He's got he has a podcast now. So who doesn't? He interviewed Marjorie Taylor Greene yesterday, and he played a clip last night on the show. And I really had never sat down and listened to her speak. I had just kind of, heard she was a wingnut of sorts, and she seemed pretty doggone intelligent and rational. So I'm going to have to dig a little deeper to find out, why she's so hated. Yeah. Representative Marjorie Taylor Greene says former President Donald Trump's impending social media platform will be a major threat to existing companies such as Twitter and Facebook. The Georgia Republican told the Examiner those on the right will be eager to join the new platform once it goes live because they remain loyal to his cause. Once he launches his media company, this new platform will be a major threat for Facebook and Twitter and any other social media platform in the future, because we know that conservatives and Republicans are going to flock there because they'll want to be where he is on social media. So they're about to lose it. I hope this goes well for him. The launch of Mike Lindell's, what was supposed to be a social media platform, I understand that launch did not go so well. But I didn't log in. I didn't see it personally, so I can't say for sure. But right, right. Now, what are your thoughts, real quick? I know you got to run, on this vaccine. I think is going to become mandatory to whatever degree. But what are your thoughts? I mean, we talked about it briefly already in the show. Uh, what are your thoughts overall? I do. In fact, I was in San Francisco on business, my wife and I, the summer that it hit. I mean, that it really became a thing. That was 83, 84, right in there. Hmm. Mm-hmm. that had something that has killed less than 1% of the people who were infected by it. I do. In fact, I had an employee who worked for me for a number of years, and his mother was given thalidomide when she was pregnant, and he suffered all of the worst possible things that could come. His arms were uh, deformed. It was, and I had so much respect for him because he worked so hard, and he always kept a positive, upbeat attitude despite the hand that had been dealt him. But yes, thalidomide was bad, bad, bad medicine. Right. Yeah, which brings me to my point here that I want to share with you before you take off. I know you got to run. When we originally launched CTG, which is our cryptocurrency, it was a much different time. We lived in a much different world. This was pre-pandemic. This was pre whatever happened to this election. This was in the very early days of the Trump presidency. And so a lot of people, of course, have asked all along, well, what does crypto and, you know, religion, you call yourself Christian traders, what do the two have to do with one another? Well, that's a discussion perhaps for another day. But CTG is being, you know, we're back working full speed ahead on the project. But I just want to share this real quick. Religion, a return to bondage. To begin, it's not a little ironic to me that the literal meaning of the word religion is to return to bondage. It comes from two words, the prefix re meaning to return and the root legar meaning to bind. Since everyone wants freedom and happiness and many turn to religion to find it, the regrettable consequence is that too often the only thing they get is greater enslavement. Some of you are members of churches who know exactly what I'm talking about. As believers, we're called to be of one mind and one accord. However, throughout recorded history, organized religion has failed to unite mankind. In fact, more have died in the name of God than any other reason save one: money, specifically the love of money. Now, there are many obvious parallels between organized religion and central banking. They are the primary forces that have driven kings to send men into war, while priests have been forced to turn believers into beggars. The truth is, ministry costs money, and those associated with the banking cartels seem to have most of it. Today, we find ourselves at their mercy via fiat currency. CTG is not a new religion and certainly not a bank. It is an emerging ecosystem built on faith, a touch point, if you will, for those who embrace the Bible as the inspired Word of God. Soon we may need a vaccine passport to fly, to get an education, to enter a public building, possibly even to buy groceries. Day by day, our freedoms are being eroded. It is written in Revelations 13:17, and that no man might buy or sell save that he had the mark, or the name, or the number. First, God was taken out of schools. Now there are bills in Congress to take guns from our homes. And in the not too distant future, perhaps as detailed in Revelation, our ability to buy or sell anything may be done only at the discretion of our duly elected officials. CTG is a grassroots movement created by believers for believers. Stay tuned for more details as they develop. And Dr. Tom, we thank you for another exciting Thursday. We always look forward to having you on the show. And I look forward to talking to you on a couple of different things between now and next Thursday. All right, sir? All right. Take care. Okay, guys, on the S&P, as we open the show, we talked about price had found resistance 2 ticks lower than yesterday's high. We were printing this red candle as we were speaking, and so we said the next high probability move is for price to come back to the BBC, the green line. Price always reverts to the mean. Just so happens that the BBC and the WTZ, the weekly trading zone, are lined up. So that's 2 good reasons for this to hold as support. Now, we know that resistance overhead is at the step line. Okay. And what did price do? Price shot right up to the step line, backed off. So we came down to the zone. We spiked it a bit. So far, the BBC and the zone are holding as support. This candle has 10 minutes of life left in it. If price, green, which is, we've got a 30-minute doji on our hands right now. This thing can go either way. Remember, we don't know what's going to happen next. We only know what the next high probability move is. If the low of this candle is taken out, then the next high probability move is to be short from 41.59 down to 41.51 down to 41.47. If support holds, price needs to overcome blue and climbing, the step line, the previous high. Then we have a 2-point window of opportunity, followed by another 2-point window of opportunity, followed by yet another 2-point window of opportunity. So no matter which way the market ultimately decides to go, we've got opportunity on either side. It's a beautiful thing about trading futures. One of the many beautiful things is that we can be long or short or both, not only in the same trading session, but even in the same hour if that's what the chart dictates. This is not investing. This is trading. Now, if we come over here, this is investing. Okay. We had an all systems clear to be long back around 39.90 on the S&P. And then we had the chart as an investor, recommend you take profit up around 41.21. Now that's probably what more would consider a swing trader than an investor. So if you really want to get the investment perspective on this, let me just scrunch up this daily chart a little bit. See if we can fit it all in. This was coming off the pandemic low. So we had a leg, price always reverts to the mean. And then a leg, so we had this double top here around 3,500. We had a small dip. As we broke this double top, the S&P 500 Emini futures long term has gone from 35.23 up to the new all-time historic high at 42 and change. Okay, that's a real nice move at $50 a point. Question is, do you invest in the index itself, or do you try to break down and invest in the 500 individual companies that comprise the S&P 500? Well, you know that our method is to trade the index, okay? Whether it's the S&P or the Dow, the Russell, the NQ, and we enjoy the leverage that trading futures provides us. When the S&P moves 2 points, just two. Today's range, to give you an idea, and today is by no means an oversized candle. We got a high on the session of 79, a low on the session of 40. So basically a 40-point range on the session. 40 points at $50 a point, that's $2,000. Okay. Now, if you just take 2 points a day out of the S&P, that's $100 per contract traded. When you become a CFRN passport holder, okay, you have access, unlimited lifetime access to unlimited one-on-one mentoring, to our live daily training, 2 hours every trading day, our indicators, our methodology, our strategy, everything we do, everything we've ever done, and anything we might do in the future. We've been doing this since 2005, and yet still outside of our walls, 9 out of 10 new traders fail. Why? There's a myriad of reasons. One is they don't have a teacher. Imagine if you wanted to become an electrician. Would you try to just figure it out on your own? That might be a shocking experience. What about if you wanted to be a pilot? How many pilots do you know that taught themselves how to fly other than the Wright brothers? Doctor? See, any profession we know, any career choice requires an education. But yet, every day, ordinary people like you and I open up accounts from unheard of brokerage firms to the big names. And because the commercials and the websites make it look so easy, they throw their money at the market and the market swallows it up. 9 out of 10 traders don't have a teacher. We have a live teacher that teaches you every day for 2 hours from 9 a.m. Eastern to 11 a.m. Eastern every trading day. It's an interactive environment where you're able to ask questions and get answers. You have unlimited access to one-on-one mentoring. That's like having a tutor that comes to your house and sits with you one-on-one to help you learn our strategy, except we don't actually come to your house. We do it via GoToMeeting. 9 out of 10 new traders don't have a business plan or a trading plan. I don't care what kind of business you have, whether it's landscaping or brain surgery. If you don't have a business plan and some kind of operational directive, your business is doomed to fail. So it's no wonder 9 out of 10 new traders fail. However, if 9 out of 10 fail, I guess using simple math, that means 1 out of 10 actually succeed. The passport, which is $5,000, okay, to be exact, it's $49.97. Like the cashier at Safeway says, would you like to round that up? So yeah, if you don't want to count out the change, you can, and we do accept all forms of cryptocurrency. And by the way, SafeMoon up 40% today. Now, I only own 34 million of those coins, which cost me a whole $160, I think. But hey, 40 cents, 40% is 40%. Maybe it's the start of something big. I don't know. We'll see. Dogecoin, okay. Now, uh, thanks to one of our members, when I was unable to buy Dogecoin back in January, because none of the exchanges I was affiliated with offered it at the time, uh, he picked it up for me. And, well, we had 69 cents, I think it was yesterday. So there's a lot going on out there. I know I've jumped from being a passport holder and all things Emini to stepping into what's happening in the world of crypto. But no matter what it is you want to do, you need somebody to show you how to do it. Okay. Now, we don't have any upsells. If you become a passport holder, you're not going to get an email in a week or a month pitching you on some new idea, some new product, some new indicator, some new oscillator. Once you become a passport holder, then you're not only grandfathered into everything we've done in the past, but anything we might do in the future. $49.97. If you want to round it up to $5 grand, that's fine. But the good news is, not only is it far less expensive than most trading strategies out there, it comes with all the tools, 24/7, 365 support. If it's 2 a.m. and you have a problem and you need help, go to Telegram. Chances are there'll be somebody there to help you. You can call us anytime at 949-42-EMINI. Send an email to support@cfrn.net. Peeking back real quick at our daily chart on the S&P 500. Now, if we go sideways for a day and develop this right shoulder, again, we're not pattern recognition people, but sometimes when something's staring you in the face, it's difficult to ignore. If we fill out this right shoulder with another day of trading, we've got red and falling overhead, so that's bearish, so we do anticipate lower prices. Okay. The neckline is down around 41.11. And so from the top of the head, if this turns out to be a head, as in head and shoulders, that takes us down just beyond the 50% Fibonacci price retracement of the last leg up on the daily chart. That means an entry around 4,100 that could potentially take you down to 4,000, 100 points, $50 a point, $5,000 per contract traded. If you've earned the right to trade 10 contracts, that's 50 grand. There are people in America today who don't make 50 grand in a year. If you can take 2 points a day out of the S&P, and if you can be patient enough to earn the right to trade 10 contracts, that's a grand a day. That's just a function of math. It has nothing to do with our strategy. If you can consistently take 2 points a day out of the S&P and over time earn the right to trade 10 contracts, it's a grand a day. It puts you in the top 3% of wage earners worldwide. The biggest mistake most traders make is once they understand that math is they just go trade a boatload of contracts and blow up another account. If you become a passport holder, if you become a member at CFRN, we're going to start you trading right away, but in the simulator, not in your live account. You need to prove that you understand the strategy before you put live money to work. That's just common sense. We want to see you put together at least 10 consecutive days in a row where you reach your goal in 10 trades or less in the simulator before you even think about going live. Once you go live with one contract. You'll trade one contract until you increase your account balance by 2 grand. Our blueprint will then give you the green light to add a second contract. You'll add the second contract with profit you earned trading 1. The blueprint will tell you when it's time to add number 3, number 4, number 5, number 10, but you only add one at a time, and you only add with profit you earned in the market. Very, very important that you understand that and that you follow that. Otherwise, guess what? You're going to blow up another account. Now, as we wrap up today's show and move into our good word for the day, we got to close below the BBC. Now, the pullback holds more often than it doesn't. Got lots of examples of it here. But this time, now we can't say with certainty because this candle's still touching the BBC. This candle's still touching the BBC. However, if price trades, in fact, I'm going to turn this into an alert right now. This will be alert number 7,340. In the last 144 weeks, we've issued 7,340 individual alerts. ESN 21. We want to consider being short. I'm going to make it 41.58. Initial target 41.56. Potential support 41.51. And then the final trade to target below the weekly trading zone 41.46 / 41.47. Okay. All right, it's in the channel, alert number 7,340. I just need to copy it over into the other channel. Okay, so that's ready to go. Triggers at 41.58. And this is what the alert looks like. Alert number 7,340. S&P. Short 41.58. Initial target 56. That's $100 per contract traded. Potential support down at the CTA, the red line. And then the final trade to target, where we've been once, twice, thrice today, 41.46 / 47. Okay. Let's peek back in on the Dow before we go. A lot of divergence between the S&P and the Dow. Okay, the Dow has pulled back to the BBC just like we discussed. So far it's held. It was good for a bounce. Our CTA was at 34,180. And so from 180, we put in a high up at 34,340. So from 180 to 340. Alexa, 340 minus 180.
340 minus 180 is 160.
Yeah, so 160 points, $5 a point. Question is this going to hold? I don't know. Well, what do you mean you don't know? You're the guy on the internet, right? You're the guy that's been doing this for years, right? Yeah, and I'm the guy that always tells you the truth. I don't know what's going to happen next. The high probability move from here is that we do hold and we put in another leg to the upside. 20% of the time, the market does not do the next high probability thing. And we have the data to back that up. Over the last 144 weeks, we've issued 7,000, however many alerts I just showed you we had issued. Out of this week, which started Sunday night at 6 p.m. Eastern when the Globex markets open, we've issued a total of 54 individual alerts. 7 never triggered, still waiting on 6, 41 actionable, 10% have been stopped out based on not risking more than $300 per contract, per trade, less when possible, using market structure and a very simple 3-step process that we teach all of our traders. Okay, we're printing some green, so it looks like it's holding. However, we've got potential resistance here at the step line, potential resistance here, and any one of these swing highs, potential resistance from 322 to 342, there is a 20-point window of opportunity. There is a 20-point window of opportunity up here, okay? But the bigger opportunity will be on a break of this high, a pullback that holds, and then a move that takes us to the zone overhead. Price is always trying to get to a zone. Price is above the BBC, it's trying to get to the zone overhead. If price is below the BBC, trying to get to the zone below. And we'll peek back at the Russell. Okay. Okay, I drew this in earlier in the show, so those of you that were tuned in saw it. And again, I apologize for the audio issues on YouTube today. I'll figure it out. I'll get it corrected. And thank goodness for Valerie and the fact that she always records so that we have a backup so that we can take down the bad recording and upload a good one. So what was our idea on this? Do you remember when we talked about it earlier in the show? Okay. We wanted to see price get well below these lows here. And we have 2210 down to 2202. And the swing low so far is 2205. So we've had about a 5-point move so far. We expect this area to be good support until proven otherwise. What does otherwise look like? It looks like a red candle that moves below that low, closes below that low, and then the next candle opens, it starts printing red, and we've got a very nice window of opportunity down here. Now, this alone was more than enough to get your goal for the day. The Russell also pays $50 a point. 2 points a day, 100 bucks. 10 contracts, that's $1,000 a day. 250 trading days out of the year. Top 3% of wage earners worldwide. Now, well, if it's so doggone easy, why doesn't everybody do it? Because it's not easy. Let me say it again. Trading's not easy, but it can be simple. If you have a teacher, if you have a business plan, if you have a trading plan, if you have the tools necessary to do the job. And if you don't have those things, you can have them before our workshop tonight at 9 p.m. Eastern by just going to eminifuturestrading.com. It's that simple. That's how simple it can be. So, price is back below the BBC on the NQ. Okay, we already had 2 very nice profitable triggers off the CTA. Is price going to come down and trigger it again? Don't know, but I'll know when I see it, because price will do what it did here and what it did here. What's the high probability move from here? Well, because we're below the BBC, we anticipate lower prices. When we're above the BBC, we anticipate higher prices. This bearish cross right here, red line gets below the green line. Where does it take us? It takes us down to the zone, and then we go from zone, back up to the zone, down to the zone, up to the zone, down to the zone. Actually, I'm sorry, that's not a zone, that's a CTA. Okay, zone to zone, back to the zone. Now, these zones are published every Monday morning for our members at 6:15 a.m. Eastern. We've published them every Monday since December 14th of 2009. And they've behaved beautifully. They are our fixed support and resistance for the entire week for all markets. If we trigger the CTA again, this window of opportunity, because the zone is here, but because of this low, you've got to anticipate buying support at this area. So you're in, you're out. If you take your entry, well, right at the zone at 56, and you trade it down to, it's about, let's say there's a generous 30 points there. At $20 a point, it's $600 per contract traded. If you've earned the right to trade 10 contracts, it's $6 grand. Function of math. Okay. All right. One last look at crude oil. Crude has triggered the CTA once, twice, 3 times now. From 90 to 75. That's $150 per contract traded 3 times in a row. Once an alert triggers, there's a greater opportunity of it triggering multiple times than not triggering multiple times. Now, while we did the recap of the logic alerts earlier, I don't think I actually scrolled through them. So just so you know what they look like, this is what they look like. Okay, we're still waiting, still waiting. Thumbs up means price found the target. When you see this number in parentheses above, this is alert number 7,336. Okay. This number, when Valerie comes through and does the recap, she notes for us what the current swing high was at that time. Okay, so when she did this recap, the current swing high was 34,337. If we bring up the Dow again real quick, 34,337, right there. Okay, and so on that particular alert, getting long at 210. Now we had an initial target at 230. Our next target was at 240. Next target was at 360. So we came a little shy of that particular target. But from 330, 2410, so what do we got? 120 points, give or take. $500-600 roughly per contract traded. Remember, there's 2 different types of alerts. There's the concierge and the logic. Concierge is based on historic price action. Logic is based on current price action. And the two do work together hand in hand. And when they come together, like a hand in a glove, that's where you'll find your highest probability, lowest risk trading opportunities. So these are all ones we're still waiting on the outcome. Here's a long on silver. Remember, a $1 move in the price of silver is $5 grand. Now, the initial entry was 65 to 67. The final trade 2 targets way up at 27. Let's take a peek back at silver real quick. And the high on the session, 27.58. At the time of the recap, the swing high was 26.68, but we've done all this since then. So from 26.65 to 27.65, that's a $1 move. That's $5,000 per contract traded. This was a long on gold, then a long on crude oil. Red X means we got stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and a simple 3-step method we teach you. Short on the Russell, stop out on the Dow, still waiting. Short on the NQ, long on gold, no trigger. Short on crude. And the hour's late. This is all public information. All 7,340 alerts that we've issued over the last 144 weeks. And information is available to the public. We're transparent. Not only do we have nothing to hide, we want you to see everything we do. Now, I had a very nice mentoring session with a gentleman the other day. Things went very well. He's coming along very nicely. And at the end of the mentoring session, the tone in his voice changed a little bit. He goes, "Could I ask you something?" I said, "Yeah, you can ask me anything." He said, "Why do you do this?" I said, "Well, because you booked the mentoring session." He goes, no, I mean, why do you do this?" He goes, "I can see you know what you're talking about, but I mean, why?" Now, how many times have you ever heard the old answer, "Well, the market's been good to me. I just want to give back"? Does it make you throw up just a little bit? You can kind of taste it in your mouth. I mean, come on, please. What an insult to another man's intelligence. Now, has the markets been good to us? Has God been good to us? Well, yeah, okay. And if you've ever taught anything, whether it's auto mechanics or biology or how to play tennis, when you see someone who has struggled to learn how to do something, finally learn how to do it and do it well, that brings you great personal satisfaction. So, yeah, there's that element, okay? Who doesn't like to help somebody, right? But it's a business. It's biblical. Dr. Tom mentioned it during the show today that a man should have multiple income streams. In the book. In fact, the book says you should have 7. Okay. I don't know how to do a lot of things. I don't know how to play the piano. I don't know how to work on a car. I don't know how to fly an airplane. I don't know how to fix my own plumbing. So if I'm going to have 7 streams of income, I better find some things that I actually do know something about. And so I've spent the last 15 years, Michael and I, in the world of futures. So while we don't think we're the fastest gun in town or the only gun in town or even the tallest, if you do something every day for 15 years, you're going to learn a little something about it. At least you know which end of the wrench to hold. And so, well, we get paid for this. As I mentioned earlier, a passport's $5,000, $49.97 to be exact. Feel free to round up. When I'm teaching is when I have my flashes of brilliance. If I just sat in an office by myself every day, not talking to anyone else, trading's a lonely business, staring at the charts, putting on and taking off trades, I would probably never grow on any level as a trader. But you guys keep me on my toes. It's when you ask questions that my mind goes into motion, and not only am I able to explain to you the concept you don't yet understand, it opens my mind for more information. But at the end of the day, would I do it if I didn't get paid for it? Let me just be honest. No. Now, with that said, the first 2 years of CFRN, Michael and I did do it for free. We had to build an audience. We had to develop a track record. We had to, we had to make sure we actually knew what we were doing. But now you can go to youtube.com/CFRN. You can scroll back a day, a week, a month, a year, 2 years, 5 years. we've done a show every day. Well, we have the live training room for 2 hours. We take a 30-minute break, and then we come back and do this 2 hour plus broadcast. We've had afternoon broadcasts that run 3, 4 hours. Some days I have to cut out and do something, it's an hour. But again, transparency. We're transparent about everything we do. When we get stopped out, we're not ashamed or embarrassed. That's just part of trading. Getting stopped out is as much a part of trading as breathing is a part of life. Now, that's easy to say, but it still hurts when it happens. Get over it. You got to get over it. You just got to get over it and say next. Move on to the next opportunity. And there's always another opportunity. We trade every market exactly the same. People will say you can't do that. They got different personalities. Okay. I don't disagree. I'm not looking for a relationship. I'm not even making an investment. This is a trade. I want a window of opportunity where I can step in and step out with at least a couple points. That allows us to use our strategy and our indicators to trade every market and every time frame exactly the same. If the 4-tick range chart is too fast for you, I'll show you how to use the same strategy on a 30-minute, on a 5-minute. We'll find your comfort zone, and I'll teach you at that level. Okay? Again, tonight's Thursday night, members only workshop. If you want to be in there, go to eminifuturestrading.com, get signed up. Valerie will send you everything you need. I'll see you tonight in the workshop. All right. Good word for the day. We have been talking the last few days about being a people pleaser and why that's an issue, and we need to fix it. If you missed those last two shows, if you just scroll to the very end, fast forward to the very end, you can catch them. But today we're going to talk about price, or can you pay the price? 1 Corinthians 9:26. I run straight for the finish line. Paul wrote, I do not run aimlessly. I do not box as one beating the air. Long distance runners don't just focus on speed, but on endurance. They pace themselves so that as they approach the finish line, they can pull out all the stops. Paul said, 1 Corinthians 9:26, I run the race with determination. I am my body's sternest master for fear that I should be disqualified. For long distance runners, giving up isn't an option. Despite delays and disappointments along the way, they know they'll never be satisfied sitting on the sidelines cheering for those who've paid the price to run the race. So if you're the kind of person who longs to fulfill your God-ordained purpose in life, give it everything you've got. Go for it. And don't forget, the greater our talents, the greater our responsibility. It's one thing to achieve success. It's another thing to handle the pressures that go along with it. Keep your eyes on Jesus, the champion who initiates and perfects our faith. Hebrews 12:2. Having something great to look forward to enables you to endure. And God will expose you to opposition and criticism to strengthen your character. That way, when greater blessings and responsibilities come, you'll be able to handle them. Success is only possible when you have a passion to cross the finish line. So the question is, can you pay the price? When the pressure is on, Can you stand up like Nehemiah when he rebuilt Jerusalem's walls and tell your opponents, my work is too important to stop? This guy was building a wall with one hand and carrying a sword in the other. He was focused. Nothing was going to stop him. Now, the question again was, can you pay the price? When the pressure is on, can you stand up like Nehemiah? If your answer is yes to that, fix your eyes on the goal and run the race all the way to the finish line. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.